Good morning, Lagos. It's the 27th of October, and this is Follow the Money with Ugodre, proudly brought to you by Nairametrics, where we talk about the latest on what's been happening on the stock market and the Nigerian economy in general, breaking it down for you, our gentle viewers. And I'm your host, Olusegun, and joining me today is my trusted market partner and seasoned analyst, Mr. Idika Aja.
Yeah, Shegun. Good morning, and thank you very much.
Yes, welcome, Mr. Idika Aja. As I've highlighted today, we have a packed show today. There is news on the palm oil performance, the Treasury bill auction, and that rebound from Guinness Nigeria that everyone is talking about. Let's get started. All through the year, we saw Nigeria's top palm oil players, talking about Okomu Oil PLC and Presco PLC, have been showing their strength again. With palm oil prices high and domestic demand holding firm, both posted strong results for the first 9 months ending in September. And people are asking who did better on basis of margins, revenue growth, and scale. What do you think about that?
Yeah, first of all, two of them, they did very well. Even surpassing their longer-term performance in terms of 5 years, they did better when you look at their 9-month result. But we are not talking about who did better.
Okay.
Let's take it one by one. Let's look at their profits. In terms of growth, yes, like I said, they did very well, growing their profit above 100%, which is very, very important, very, very good for investors. That is one. I think this one did well. Okomu did 113%. Presco did 114% in terms of profit after tax. Now you go to the balance sheet. That's another point that is equally good for investors to note. Mm-hmm. In terms of scale, Presco is far, far better with a larger balance sheet size, but it's leverage. It has higher depth. While Okomu is smaller, but it's operating without much depth. And even if you look at their profitability in terms of return on equity, the leverage position of Presco at least magnified its return on equity, which he did very well. I think that should be about 54.78% in terms of return on equity, which is okay. This one was giving return on equity of above 50%, even 30% is okay. So he did very well. But the problem is that because it is highly leveraged, it affected his interest coverage ratio, which rose to 5.54x, which is still okay, but it grew like that. Then another important thing is dividend, which is very, very important. You have to look at, because that's what is important to investors. Now, for the first 9 months, Okomu paid 14 Naira dividend. That's 2 interim dividends. The first one for first half year, then the 9 months. They paid 13 Naira and 10 Naira. That is 14 Naira. And that means about 63% payout ratio based on their 9 months profit after tax. Then coming to Presco did 13 Naira, 20 Naira, and 10 Naira. And that is about 27% of payout ratio. You can see that maybe let me use the other term that Presco is a bit stingy in terms of giving out to shareholders. So Okomu did better there. Then, of course, you talk of valuation, which is another important thing that you have to consider when you want to know who actually did better. And if you look at their valuation, looking at their price to earning ratio, it appears that Okomu is a little bit expensive compared to Presco. So I think, but the most important, the two of them, they are wonderful stock and they have done very well. So I think even this year they started, I think Okomu started with a share price of about 444 Naira. I think it has moved up to 1,020 Naira. The same thing with Presco. Presco started at, I think, 447 Naira this year and has gone to over 1,400. You can see the growth in terms of share price. So growth in share price and growth in terms of profitability and revenue. So it's a wonderful pick for anybody who might be interested to invest.
And of course, I suppose that would translate to profit margins as well.
Of course, of course, they have, they have very strong profit margin. Maybe because of the demand for the product, they can't even meet the local demand. So definitely, they have a very strong profit margin of over 50%.
Wow. So supposing they both have similar profit margins, which would you personally lean towards? One, a company with the bigger scale or with leaner operations?
Well, it depends on what you really want. But if you talk of efficiency,
Okay.
then you look at the one that has a higher profit margin. That means it's able to at least manage its cost, grow
Cost
its
optimization.
revenue.
That's the leaner operations.
Not necessarily leaner operation, efficiency.
Okay.
Efficiency. Then you equally look at the asset turnover.
Okay.
If you look at the asset turnover, Okomu did better. I think he has a asset turnover of more than 1, while Presco is about 0.54, though it increased. So in that angle, Okomu did better.
Thank you so much for that insight, Mr. Idika. That was very clear. And our next topic we'll be segueing into is news on the Treasury bills auction. According to the latest update on the Nairametrics website, we learned that on the 22nd of October, the Treasury bills auction blew past expectations, with bills totaling to 750.91 billion naira. Even though only 650 billion was on offer, and we have the government allotting just 391.58 billion, leaving many bids unmet. What do you think about that?
One, it depends on what the government really want, and normally it's a rollover, so they have to reduce, maybe trying to control liquidity.
Okay.
But the most important thing, I think, what expected is why you have that oversubscription. Now inflation is coming down. Rates are coming down. At least rates the reduced rate from 27.5 to 27. So I envisaging that yes, rates are going to come down. So investors would like to lock in into these investments. That is why even if you look at the auction, especially the 1-year tenor, that's where you have more subscription, because people would like to take a position there in anticipation that rates are still going to come down, because as CBN cuts rates, as they continue to cut rate, definitely it's going to affect the yield on those bonds.
Absolutely, because we saw at 91 days it stood at 15.30%, at 182 days 15.50%, at 364 days 16.14%. I mean, why in particular do you think this auction was oversubscribed? You've given the government's perspective, but from the perspective of the citizens, why do you think this auction was oversubscribed? I know you mentioned that people might think that at some point it may reduce, but why do you think people even overshot when they learned that these amount of slots were should I say allocated? Why do you think more people subscribe to that?
One, first of all, remember that treasury bills are risk-free investments.
Yes.
That means they are issued by government. That gives you some level of comfort that nothing will happen to your investment. Secondly, if you're expecting, because by November the CBN will meet again, the MPC will meet again, and with the expectation that rates are going to be cut too, that MPR is going to be cut. So given that, definitely people will rush in and say, okay, let me take a position now, because once you cut rate, the yield of this from the fixed income space will drop. So that is another major reason why people might have decided that, okay, let me lock in on this rate.
Okay.
Let me lock in on this rate, with the expectation that, okay, by the time they meet next month and they cut rate, assuming they cut rate or even retain that, definitely it's going to affect the yield. Remember that as rates drop, the yields on fixed income assets will equally drop. So
Yes, but still, with inflation so high, what does this subscription, frenzy tell us about real returns and investor expectations?
Well, if you look at if you look for, I think from that story I read, apart from the treasury bills are issued at discount. Then if you look at the true yield, that means the implied yield, that is the effective yield, which is even higher than the discount rate you have just mentioned. I think for the 15-day, you have about, the yield is about 15.92. The other one is, I think, 16.81. And the last one, that is 364-day treasury bills, is about 19.25. Now, what is telling you now, if you check the first one and the first day, 90-day and 180-day, the yield, the true yield. The true yield is below inflation. So yes, investors might be making money, but technically they are losing money because it is lower than the inflation rate. I think it's only the 364-day tenor that is higher than the inflation rate. So, but the key thing there is that it's secured, it's a security, it's a secure investment that, yes, come what may, that you get the money. And besides, anything 15% yields or 16% yields is good. Is good. That's why I see it, yeah.
Yes, but still, speaking about the present, what do you think the outlook is on from here? Do you think demand will stay strong, or will liquidity and risks, fear, maybe reduce it?
Well, one, for you to be able to have that better outlook, you have to look at what happens in other asset classes, like stock, crypto, other alternative asset. But I don't think that it's going to come down, because most importantly, you have risk-averse investors, you have risk-tolerant investors. So those who are risk-averse will definitely pile up there and try to take a position and keep on subscribing to that. Though we might likely see a cut in rate by the time they meet next month. So, but the outlook is that yes, people are locking in, people are taking positions, but I don't think somehow it might not show. But remember, these are institutional investors like banks, so most people will prefer where their money is secure.
Okay, thank you so much for that insight, Mr. Idika. And we will be going on a quick commercial break. And when we are back, we'll be talking about Guinness Nigeria's big comeback and surge in profit. Hello, Lagos, and welcome back to Follow the Money with Ugodre, and I am still here with Mr. Idika Aja. So, Mr. Idika, let's talk about Guinness Nigeria's big rebound. We saw that Guinness Nigeria PLC released its Q3 results for 2025 and reported a pre-tax profit of 15.8 billion naira, up by 315.49% from 3.8 billion in the same period in 2023. That's really impressive. And we also saw that they lifted their 15-month pre-tax profit to 43.7 billion after suffering a loss of 73.6 billion previously. But here's the nuance. Their total assets grew 8.78%, yet retained earnings remain negative. Do you think that drove the 315% jump in profit?
Well, for the consumer goods sector, even including the brewery subsector, from 2023 to 2024, because of key micro economic indicators like inflation, interest rates, then exchange rates, that really affected them. So 2023, some of them sustained losses that even eroded their shareholders' fund. Then coming to 2024, they started coming back. Now 2025, even when you check their half-year results, now 9-month results, you can see the recovery. Now, I think what drove that, and apart from the impressive growth in revenue, which equally grew faster than their cost of sales. So that really contributed to the impressive bottom line. Another thing there is, those exchange rate volatility that wiped out their profit because of the stable exchange rate now. So that one is cut off. And with the MPR now coming down, definitely it will affect their interest expense.
Okay.
So all these factors contributed to that impressive growth.
Okay.
And you made mention of retained earnings still being negative. Yes, they have been carrying that. Normally due to accumulated losses, I think from 2023 to 2024. Yes, but you can see it's gradually coming down, and hopefully by the end of this financial year, 2025 financial year, they might likely exit that negative return earnings.
Absolutely. Now, shall we talk about the red flags? And when I say that, I mean the retained earnings negative despite growth. What do you think that tells investors about sustainability?
Yeah, like I mentioned, the return earnings has been coming down. It was much, so it's gradually easing out. And like I said, maybe by the end of 2025 financial, that is this year, they may likely exit return earnings. What it means that normally, if you have negative return earnings, definitely you will not be able to pay dividends. That's the implication for investors and shareholders. You don't expect dividends unless you exit, unless maybe there's a way you structure your book that will be able to do that. But if you have a negative return, and definitely you can't pay a dividend. So, but let's hope and see. I believe that by the end of this year, by the time they announce their Q4 results, definitely they are likely to go out of that negative territory. And,
Fingers crossed. Thank you so much for that analysis. Now, shall we segue into the latest on the NGX? I mean, by the market closing on Friday's trading session, we saw it's bullish as the all share index advanced by 0.75%, pushing the year-to-date return to 51.22%. Consequently, the market's capitalization rose to 98.79 trillion, with drivers being with gains from MTN, UBA, Aradel, and Dangote Cement. What do you have to say about that? What do you think about that?
This earnings season, so the results are coming out, and the companies are doing very well. So investors are taking positions.
Okay.
So that is expected, especially those big boys, Arada, MTN, Dangote, Cement. So at least they are among the NGX 30. That's the 30 most valuable companies that are on the NGX. So that is expected. So I had earlier said it that I'm expecting the market cap to cross 100 trillion, and we are at 98. So I still believe that by the end of this year, it will cross 100 trillion.
Absolutely. Thank you so much for that insight. And now, shall we take the top 5 gainers and losers? I'll be taking the gainers, and I would let you take the losers. On the gainers list, we have, starting from ASO Savings, we saw a 10.00% increment to close at a price of 0.66 naira. Up next is the Keja Hotels, seeing an increment in percent of 7.89% to close at 20.50 naira. Up next in third place, we have Regency Alliance Insurance, seeing an increment of 7.44% to close at 1.30 naira. Up next, we saw Caverton gaining 7.08% to close at 6.50 naira. Up next, and finally for the gainers, we have NEM gaining 6.70% to close at 30 naira.
Okay, yeah. For the top 5 losers, the first one there you have Union Dye Consult that lost 9.09% to close at 8 naira. The Nimitz lost 6.67%. Cornerstone Insurance, I don't know, but well, it's part of equity because the insurance sector is doing very well. Lost 5.6% to close at 6 naira 23 kobo. Then Harden lost 4.84% to close at 4 naira 13 kobo. Then same again, the insurance sector, we have International Energy Insurance that lost 4 naira 48 kobo to close at 2 naira 70. That lost 4 naira 48% to close at 2 naira 77 kobo.
Okay, thank you so much for that. And that's it from us today on today's episode of Follow the Money with Ugodre. Till next week, don't forget to subscribe across all our platforms and stay up to date with Nairametrics.